how do I change the title? There we go. Cool. All right. All right. Yeah, that's working. Let's start recording. Good day, Mati traders, and welcome to the third blind analysis for the month. Today I want to go through the world indices just to see where we are in the world, where the markets are more likely to go, why, and what I'm going to be doing about it. But before we get started, I just got this question now saying, Timon, about your Mati trader strategy consultation, do you only teach about breakout patterns with the consultation? To answer that, the answer is no. Just like a surgeon who specializes in back surgery, he does understand other medical terms and other ailments, for example. So as I've been in the trading industry for 19 years, I have been exposed to a lot of different variables, indicators, oscillators that you can think of. So what we'll do is with the strategy consultations, we'll pop in and I'm going to use ProTrader to show you an example of a strategy that we're going to build together. But if you can see here, I'm happy to go through whether you're a line trader, a bar chart trader, candlesticks, histograms, and indicator wise, well, I can help you with Bollinger Bands, Keltner, exponential moving averages, linear weighted moving averages. Let's see, pivot points I can help you with, regression lines, simple moving averages, the awesome oscillator, commodity channel index, the MACD, the momentum. I don't know those. Oh yes, Larry percentage I can help you with, rates of change, relative strength index, stochastics. Let's see, what else? I can help you with the average directional index, Ishimoku, pivot points, parabolic time, zigzags, average true range, standard deviation, on balance volume, and even volume. I can definitely help you if you want to create a strategy around volume spread analysis or volume. I can help you with that. Just over the years, I've been experimenting with a lot of indicators, and yes, they have been successful, but they haven't suited my personality exactly. So what I did was I took away the complications and I made things easier there. We will be getting back shortly. And we're back. Okay. So today's analysis is world indices. So basically I want to go through where the world is going, the type of indices that we can look at. And this is just an opinion. So it's just one of the opinions out of many. But I'm going to be basing it more on breakout patterns to see how it is. And because it's a blind analysis means I have not seen the markets today. And I love doing this because it makes it more fun rather than having seen the markets and then being a bit predictable within what I'm going to say. So I prefer this. And you got to let me know if you like these blind analysis, because I'm happy to do them twice a week or so. So let's start with the ASX, the Australian index. And we can see that since May, so I'm using ProTrader. It's an awesome platform, but you can also use TradingView if you want, or MT5, but I'll be using ProTrader in this case. So let's draw some lines. And let's say since May 26, it's been going up on quite a strong incline. However, it hasn't been making higher highs. So this was an indication that it was going to break down, which it did, and you can see it made a strong candle to the downside, and then it clearly showed that the supply was not as much as it anticipated, which means that the buying took place over here. This was a buying candle. The market moved back up, and then it formed a new form of support, and now it is back to the high of the ascending triangle, which is broken above, which means we can see some upside. And basically I just take the difference between the high and the low and I add it to the high. In this case I'm using my fingers. The beauty of simple trading, right? And then let me just grab a line. Okay, so let's see, can I make it straight? Yes. So what happened there? Just hold on a second. So more or less, I'm not going to give you exact measurements, but with my fingers tell me that the next target for the Australian index is at 6,518 points. And remember, I'm going to be incorporating Australian markets and international markets in the premium service very soon. I'm just waiting for the sweet spot between the watch list. And anyone who is watching, you must always ask me questions when you can, and I'll be happy to answer them. So there we go. First one done, Australia. The DAX has got a little bit of a different story. So let's use our lines again, and we'll populate this horizontal line, and we can populate this one, and we can say that it's been moving on a continuous sideways trend since June, and it hasn't shown any form of direction on where it wants to go. However, we are kind of seeing signs that there are higher lows being formed. Even though there's the same highs, what happens is, as long as the higher lows form and the higher highs, the same highs form, this starts to act like thin ice. So the more you hit it, the more likely it will break to the upside. So we will be waiting for that breakout to the upside, and then we will see. So breaks. Let's see where it can go. So I'm going to take my fingers again. I'm going to take the highest high and the lowest low, move it up. All right. And let's see. The next target for the DAX is about 15,200, give or take. So there it is. The next analysis. Things are looking good. Things are looking good for the upside. Next, the CAC, or France index, similar to the DAX. So this is very interesting because, you know, the European markets are currently going through, or let's say Europe is currently going through a second wave of infections, and things are not looking that great in Europe. In fact, France is one of the ones that they've incorporated and reintroduced restrictions and lockdowns. Same with the Netherlands, same with Germany, same with Spain. There's a lot of countries that are pretty much going back. Even Italy is starting to have their own restrictions and curfews again. So it's unusual that we are seeing signs that there's upside to come. And in this case with France, there is no there is no indication that we're going to get upside. There's been a sideways trend. It has just made the second lowest high. So over here it was making the same highs, and then since the resurgence kicked in, you can see that there are lower highs. So the confidence is lower than usual. So we can actually expect a break to the downside below this support, and if it breaks below, use my fingers again, high minus high minus low gives you roughly 4,324. So if it breaks to the downside, there's going to be some downside, and we can see that there was strong support in the previous trend around that level, so we can comfortably expect this downside where we'll be taking short opportunities with the MultiTrader premium service. Let's move on. Hong Kong is a nightmare. I mean, you can't even trade this at the moment. You can see it broke above this uptrend, and now it's currently coming down, and it could be forming according to the MultiTrader system program, an inverse head and shoulders. And if it forms this inverse head and shoulders, then believe it or not, the target is up here at 26,487. But we do need the shoulder to form. At the moment, this is noise, and we don't want noise. The Nikkei, or the Japanese index, indecisive. That is all I can say. When you're looking at a chart with such low movement and liquidity, and trickling to the upside, but no real confirmation, there isn't strong confidence that this market has chosen a direction. Despite the fact that the market's trending up, it's trickling up, which means that if there is a lot of selling to take place, you will see that the volume will start to increase as the red candles start to become bigger. If that's the case, then we're going to see a drop in the Nikkei down here to this level at 20,320, which is the previous support level, which was a resistance since March. I don't know, but the likelihood is that it will be coming down. The Stocks 50, another European index, sideways movement, lower highs. So we're seeing that Europe is showing a little bit of a different picture to the Australian market. All right. So I'm looking that there's going to be a bit of downside. Then, so if there's downside, then you can take your fingers between the high and the low, subtract from the low, and you get around 28.15, which is also where there is strong support around this level. So again, the stocks looks like there's going to be downside from here. Downside. Okay. Stocks 40 index. I don't want to look at this. I want to look at the Aussie December with the bracket so that I can see what is going on. The Aussie is very unusual at the moment, and it's pretty much in no man's land. I'm not very confident with how things are looking. There are kind of signs that it wants to go a little bit up, but as traders, we've got to take the short-term positions rather than the long-term, because we can say that it's been forming over 3 months, this falling wedge. This candle over here is super, super bullish. I love these candles. See that candle over here? It means that the market opened at a price. The sellers tried to bring it down, and then it closed pretty much where the open was, which calls this a dragonfly doji. Not exactly, because there was a little bit more upside than that, but a dragonfly doji is where the open is equal to the close is equal to the high. So not 100%, but then again in trading you don't always get the perfect dojis and movements. But this is a bullish candle, which means that we can actually get some upside in the next month or two, hopefully, after that horrendous August that we had as traders. If it breaks to the upside, it'll be perfect. We'll go long resources, we'll go long retailers, we'll go long, I'm hesitant to say banks. I have not had a good relationship with banks this year. No matter whether you go long or short, it's not looking good. So let's just say resources and retailers are looking awesome for picking at the moment. And I know we're doing well with our trades once again in October. And even our short with Sasol, that's also doing quite nicely. But oil is completely different to other resources at the moment due to demand and supply factors. In fact, the fundamentals are outweighing the technicals at the moment for oil. Okay, good. We are doing well. Are there any questions at the moment? Let's carry on. We have STX Fin. So this is a ETF on the financial index, which once again I said I do not like. The financials are not great at the moment to trade, and you can clearly see it by this movement. It is just completely indecisive. It doesn't know where to go. If it breaks to the upside, it then just has a fake out and carries on down, and if it breaks the downside, so this is actually perfect for a range trader. A range trader, I'm sure you're loving these type of movements, and a range trader is opposite to a breakout trader. We want the breakout during the range, and range traders just want to stay in the range and buy low, sell high, buy low, sell high, buy low, sell high. And you could have done this the entire year in March, just following this range. But for me, not good. STX IND, the industrial index. Same thing, really. I also haven't been a big fan of industrials, except in March. We got into a couple and we did well. But since then, in May, it's just been moving sideways. And even the liquidity is not even great. You can see with these gaps, I do not like gaps in the market. I don't like jumps and too big of candles. I mean, you get a candle like that, that'll stop you out almost instantly. Short squeeze. If you saw my Instagram posts on Mati Trader, you'll see what a short squeeze is. This is a classic example of a short squeeze. STX RES, resources. Okay, so now we're talking. We got into a lot of resources this year. We've banked so many winners with resources. You'd think that I was a genius for buying resources. No, I'm just following the trend. Trend is up, we keep going and keep buying and selling accordingly. When the trend is down, we short resources, which is what we did, and we're doing well. And now, during the time we've been shorting, it's been in a positive or bullish formation, which has formed this pennant formation. Pennant? Yes. I think it's a pennant because it's less than 3 months. If it breaks to the upside, you're just going to get signals left, right, and center on Anglo and Billiton and Kumba and. Not Anglo Gold. They're different. But yeah, they are looking awesome for the upside. And we can see that it's flirting with the resistance, which means that once it breaks out, boom, you're going to be getting some beautiful trading ideas. Then let's jump that one because no one trades SWX. US 30, so this is the Dow Jones. So we've gone from local and now we're going back into international. And the funny thing about the US markets is that they are pretty much predictors for our own index. They are leading indicators. And you can see that it formed that pennant formation that I spoke about with the Aussie, broke up. So the question is this the prediction for the Aussie? Good things to take notes of. And if that's the case, then we've got our confirmation for going long resources. The S&P 500, similar yet different. And what I mean by similar is that it formed that beautiful wedge pennant formation, or dare I say flag, because it's quite parallel to each other, but not exactly. But anyway, let's call it a pennant. Broke into the upside, testing the resistance, and now it's going to be causing a little bit of sideways movement, consolidation before it breaks up and carries on up. That is the idea, is that it's formed a rounding bottom, going to break up to the upside and continue up. So this year is looking good. We are looking, well, the end of the year is looking excellent, and we might just get this type of movement. Same with tech, very similar to US 500. Awesome. Now we have a general idea on where the indices are likely to go, according to my analysis. Obviously, remember, my analysis is only of one opinion. And you're going to have to do your own analysis as well. That's about it. And I hope you enjoyed that blind analysis. If you have any questions, let me know. And remember, you got to subscribe to these channels, my YouTube channel. You got to subscribe to the Facebook group MultiTrader. Just type MultiTrader on Google and just like everything that you see and follow, because there is a lot of information coming out, and I can't just get everything onto the newsletter as much as I would love to, because there are restrictions, believe it or not, which sucks. But I do have other social channels where you can talk and ask questions, post your things, like stuff, turn on those notifications. They are very important, because what other trader is doing this? What other trader is taking you on the journey, holding your hand, and actually going with it? I don't just send out trade signals and say, there. I explain it. I explain perfectly. And when there's good times, we'll celebrate. And when there's bad times, we will analyze and reanalyze and just keep going through it to the point where you feel like me, where I'm completely content. In fact, I'm more enthusiastic with these videos than my own trading. And what I mean by that is emotion. The emotions are not strong with my trading, because I have a system, I follow it, and it's like a job that I do. But being with you on this journey just makes it so much more better, makes it more authentic, makes it more real. And obviously, we're putting our money where our mouths are, which is very important as traders. And it separates the marketing side of things to the actual trading side of things. So let me know if you enjoyed this blind analysis on world indices and where we are going. And I love to hear your feedback. It really makes my day. And we will chat very soon. You have an idea now on what type of trade ideas you're going to be getting and signals. And this year has been super successful for the MultiTrader system, more successful than most years. Purely because the win rate has been in the high 80s, which is not normal. And, things might go back to normal, or we might just have cracked a system that will continue giving an 80% win rate. Either way, thank you for being with the Premium MultiTrader service. I do highly recommend that you get on board now with the MultiTrader strategy consultation. I've already helped people with moving averages and stochastics and RSI and OBV and even earnings. There was an awesome gentleman that I met on the weekend. We constructed a nice cheat sheet that I sent out at the end so that you can stick on the wall, have it there. It tells you where to get in, where to get out. And you know what? Even if you have the MultiTrader system, how do I know that it fits your personality? So why don't you have the MultiTrader system and you have your optimized system? Work towards it. See which one you feel more comfortable about. And then in a couple of months, you'll know exactly who you are as a trader. Very important, but you got to get on board now because I'm starting to get a backlog of yes, I write it on a piece of paper. I'm starting to get a backlog on people who are saying, I want to join on Tuesday and Thursday and Friday. And I want your enthusiasm to stay. So rather book now. I do have a slot for today at 5 p.m. and I've got a slot for Sunday at 1 p.m. But I can't guarantee how long that will last. So book your multi-trader strategy consultation now. You can send me an email to info@timonandmati.com and my team will get back to you. But once again, thank you again for all of your support and your time for watching these videos. I know your time is precious and the greatest thing you can give somebody is their time. Have a fantastic weekend and we will chat soon.